Hi, this is Tom Soane, and landlords, you're just going to have to trust me on this one. But believe it or not, you are actually entitled to make profit. I know, it's crazy. In this world where anybody who makes any kind of profit out of tenants is definitely a terrible person, definitely up to no good, doing something dodgy. You know what it's like. Landlords are just swimming in cash and they're all evil. But you know what? I disagree with that, because actually, Mr. and Mrs. Landlord, you are entitled to make a return on your investment. So I wanted to share a few ideas and a few tips on how you can optimize your return on investment and maximize your profits. And they're quite simple tips, actually. But a lot of people don't do this. So I want to make sure that you're getting it right, so that you're constantly generating the maximum amount of cash without ripping anyone off. So look, because we're all investors, right? It doesn't matter whether you've got a little 1-bed flat which is earning you £400 a month, or you've got a big portfolio of properties earning 20 grand a month. We're all investors, we're all entitled to a return on the investment, but we can only get the best return on the investment if we constantly optimize. So look, you might need a pen and paper for this, you might not. I think you'll get the idea. Once you listen to this, you'll get the idea of what I'm going for and how I'm doing it. But I like using a pen and paper, and so you might do too. But I want you to get your pen and paper, and I want you to write 4 sections. And I'll give you a chance to get your pen and paper while I whistle you a little tune. Okay, so you've got your pen and paper. Now, with your pen and paper, I want you to write 4 sections, and those 4 sections can be, I do it in like a big square box and separate it into 4 smaller boxes. You can do 4 columns if you want. You can do 4 sections. You can separate 4 parts of the page. So your 4 sections are income, expenditure, cash, and yield. Now they all seem pretty obvious, right? But there is a major link here, and there's also a bit of a science involved, which is what I want to get at, which enables you to maximize on all 4 of those things just by changing one of those things. So the first thing we're going to do is put our rent income in the income section. So let's just say that's £1,000. Second thing we're going to do oh, by the way, if you've got lots of properties, put all of your income into that section. If you've got one property, put your rent income into that section. Next is the expenditure, and the things that I want you to include here are your mortgage payment, your insurance payment, your management costs, your maintenance costs for that month. And by the way, I tend to do this every month. Well, actually, no, I don't. I sometimes miss a month. I sometimes forget. Sometimes I just can't be bothered. But generally I do this most months, so that I can keep an eye on my yield and keep an eye on my income, my cash, and my expenditure, and just see where I'm going. Do you know what? There was a really famous phrase, I think it was famous anyway. Someone said to me, you don't know where you're going unless you know where you've been. Now that prompted me to start recording more information so that I can analyze it, and I find it quite interesting seeing the growth of my cash and the increased return on investment. Anyway, I have digressed. Shock once again. Anyway, so you're putting in there the expenditure, mortgage, insurance, your management costs, your maintenance costs, and your tax. Now, everybody forgets the tax, but you've got to include it. If your properties are in a limited company name, then your tax is probably going to be 20% of your profit. But if you're in a personal name, it might be different because it goes down as personal income. So you'll just need to calculate that. So you'll put your expenditure in there. So let's say your expenditure's, I don't know, £500, let's just say. So now you've got your income and you've got your expenditure. Next, you're going to put your cash, and that is the sum of the cash you started with and the cash you've just made. So your cash you started with plus your profit. So let's say you already had 5 grand in there and you've just made another £500 in profit. The figure that you put in there is 5,500. Now, one thing I will interject with very quickly is that please have a separate rent account where all of your rent goes in and all of your property expenditure for that rental property go out. That makes it far easier for you to monitor and maximize. I promise you. Please don't have your rent coming into your standard current account that all of your everyday living costs come out of, please. So the next section I want you to write is yield. Now, I only use true yield. I don't use false yield or fake yield. I definitely would advise you to only use true yield. I have done a whole episode on yield because it's an area that people get so wrong so often, and it causes people to make big mistakes with their property and their investments. So true yield, please, and write your yield in that box. Now, very quickly, to calculate your yield, it's your annual net income. So in this case, that's £500 a month, which is £6,000 a year. That is your annual net income, net profit, divided by your total investment. Now, your total investment is the total equity you have in the property. It's nothing to do with how much you paid for the property. Why? Because at any point, you could sell that property and get the equity that you've left in that property. So because you haven't done that, that money that could be in your pocket is now in the property. So therefore, that is your investment. Now, to make that a bit, to elaborate on that a little bit, your purchase price is static. You can't change that. It's nothing to do with your yield now, because your yield is something that matures and evolves over time as the value of the property goes up. As your mortgage interest rate goes down or goes up, your mortgage payments go up or down, your insurance premiums go up and down, your net profit goes up and down because of those things. Your rent goes up, your rent goes down. It all adds up to your true yield, which is calculated constantly. It's an evolving sum. So now you've put your yield in there, let's just say it's 15%. And by the way, that's a reasonably accurate figure. All of my properties are between 14 and 20% rental yield, true yield. And my flip to sells are normally between 25 and 35% true yield. So now we've got our income, our expenditure, our cash, and our yield. And now we can work backwards and optimize. We could say, first of all, we're going to increase our yield. So for my instance, if I've got a 15% yield currently and I want to increase it to 16% yield, then I need to either increase my rent income, decrease my expenditure, or make more use of my cash. If I've got a load of money, if I've got 10 grand just sat in that bank account, then that might pay for an extension, which might increase the value of the property by 20 grand. So it's cost me 10, but it's increased the value by 20. And I might be able to remortgage 75% of that increased value. That means put more money in my bank, or it increases the rent value. So adding an extension might increase the value of the rent by £50. Therefore, my income goes up, my expenditure stays the same, and my yield goes up. So that's how you calculate it backwards from your yield. If you want to increase your cash, you just increase the rent but keep your expenditure the same. If you want to increase your cash, you can decrease your expenditure and leave the rent the same, or you can do both, increase rent, decrease expenditure. One way or another, they're all linked. Make the most you can with your cash, make the most you can with your yield, increase your income, decrease your expenditure. And I want you to write a number in the time and energy section which relates to how much time and energy you've put into that property. Now for me, those are always ones, because I don't put any time or energy into my properties now. I have a systemized, automated, delegated, managed entire lifestyle of being a property investor and a landlord. So that's just me. That's because I'm the anonymous landlord. That's why I did the podcast, The Anonymous Landlord, to teach you how to be that too. So you can put in there the amount of time, the amount of energy you're putting into that property. Now you do the same thing. If that number is 5, next month, try and get that to 4. You can get that to 4 by working out what time have I put into that property and how can I outsource it. If you've spent a load of time fixing maintenance problems, then give the tenant the contractor's number that you use for gas. the contractor that you use for electrics. Give them their number and let them contact them directly, but the invoices only come to you and the contractor only gets approval from you to charge anything. And that's a very quick way of outsourcing that one little bit, saving yourself time and energy. Because come on, what's the point in making money in property if you've got no time or energy to enjoy it? That's what the anonymous landlord is. Maximum income, maximum profit, maximum return on investment and yield. However, minimum time, minimum energy. That's the anonymous landlord. Got there in the end. So you should do that every month. You should rework out your income, your expenditure, your cash and your yield every month, and then work out where you want to optimize. Now, some months you might not want to optimize, and that's fine. You might not be able to optimize, that's fine. You might not be able to increase the rent or decrease your expenditure or increase your cash or whatever like that. That's fine, but at least you're tracking it. Do it every year. And what you'll end up having is a real good snapshot of how your property is performing and where you can improve. And remember, if you do outsource something, if you decide to bring on a letting agent, one rule I want you to follow: pay for a service, haggle a product. Pay for a service, haggle a product. If you haggle a service, you're less likely to get the full premium service that you want. If you are paying a company a very small amount for their service, then you're less likely to get the full premium optimal service that you want. Now, a managing agent, for an example, is worth its weight in gold, because a good managing agent will be allowed and enabled to increase the rent more efficiently if they're really close with the tenants and they're really good at looking after the tenants. Pay for the service, haggle the product. Now, remember, optimizing the return on your investment does not mean spending more time and effort and energy on it. It actually means the opposite, in my opinion. Optimizing your investment means saving time, saving money, making more profit, optimizing your yield, decreasing your expenditure, increasing your income, but doing it in a way that's not balancing between, you increase your time expenditure but decrease your property expenditure. Work out what you are worth per hour. So if you're worth £50 an hour, let's say, in your job, or you would label yourself as £50 an hour, then if you're spending an hour a week just thinking about your property or calling someone, dealing with a tenant, dealing with maintenance, then surely you have to outsource that. Or if you, over the course of 1 year, you are spending, 12 hours over the course of a whole year on your property, that's £600 a year at £50 an hour. You might as well outsource it and become the anonymous landlord. So anyway, just to recap, 4 sections: income, expenditure, cash and yield. Then work backwards. Which one do you want to increase? Because they all link to the other 3 boxes and sections and whatever. So I hope that helps. Really simple way to work out your yield and work out where you can optimize. So I really want you to go with that. Give it a shot. Let me know how you get on. My name's Tom Soane, and this is the Anonymous Landlord.